Hi, everybody. This is Hyperwave, and it is 5 p.m. So we are a little bit after market close. This is going to be a lot of fun. And today, obviously, is a big day from what happened. So I will start off by a little shill. Tyler and I, as you will see in a second, boom, boom, are matching thanks to Stoic Crypto, who I will shill a little bit later. And as you guys know, Tyler's favorite adage is the trend is your friend. We have a little Bitcoin sign. So we are being mad cool by matching today, and we'll show that later. Well, shilling it now, actually. It's awesome. Stoic Crypto. We'll show his link later. So what's happening today is, I think, going to be super, super interesting. We have been talking about the elections. We did talk about it and how it would affect the markets. Actually, in the webinar on Saturday, I like the fact that my partner is bold and makes his strong statements and is never scared to. And so we're going to look at how those ended up turning out. So specifically, okay, at 9 p.m. last night, let's go over it just really quickly and then throw in Tyler. 9 p.m. last night, when it became clear that the Dems were going to take over the House, and they did, the U.S. stock market futures began to move up. Okay, about 0.5%. And when it became clear that when the Republicans were going to add their seats to the Senate, again, it went up about another 0.5%, and on all the major indices. And now it's still going up, okay? It got stronger in the morning when we got closer to open, then kept going up and closed even higher at close, between 2 and 3% on all the indices. So yes, we're an hour later, but that's because we've been having some fun playing and checking out the markets one more time. So, and also to note, as Tyler was just telling me and we were going crazy on, the Dow is actually up 545 points. So, but a number of these indices, according to Consensio, were in danger, right? We've been talking about that because they've been dropping below their moving averages. So this action, on the indices brought almost all of them actually up from the depths. So it's an interesting moment. So the question is that we're going to look at today: where do we stand? What to do step by step going on, from optimism, cautionary, defensive measures. Tyler's going to talk about all of it. And then, yes, we haven't talked too much about Bitcoin because it's been boring. But Tone had a great show where he was talking a lot about the fact that actually there was some movement. No spoilers on what ended up happening, but so we are going to talk about Bitcoin, but also especially a lot of people have been asking what's up with the phase 2 line and where it currently stands. So we're also going to take a look at that. And now I've been talking too much. The trend is your friend too, right, Ty?
Absolutely. It should be everybody's friend. It's the single most important thing you need to know about investing. You don't need to know what you're buying. You just need to know when you're buying it. And if you're in it, you've got to know when you're selling it, no matter what it is. And as everybody knows, I've been very nervous over the last 4 or 5 weeks at the ferocity of the drop in some areas of our market. Things looked to be dropping so sharply that they would not be able to come back. And in those, we cautioned that people should be fully in cash in those particular things. But the big overall markets, the Dow, the S&P, the NASDAQ, were damaged to the extent where we had to raise about 30%, 35%, up to 50% cash, and even put some inverse funds on as we got closer and closer to the election. So my thesis has been, and today's action, I believe, bears me out. However, today's action cannot be assumed to be definitive. We can easily give that back and keep the downtrend going. So we're going to take a very close look at indexes and sectors this morning, and I'll give you my thoughts on it. But I'm trying to go even above the financial markets and talking about the overall economic picture. We've talked a lot about it in terms of up to today, but I want to give you my impression after the action I saw today of what it means economically and possibly for the stock market for the rest of this year and going well into next year. My assumption was that the correction was not economic and it was not fundamentally driven by problems in the stock market. It had to do with the confusion around the election. And I think the action we saw last night proves that. Because if the fundamentals on a macro basis are really solid, then noise around news items or even major political events should not be able to decouple reality with the fundamentals. And we've been stressing over and over again for the last year and a half, almost 2 years now, that things were put in place that resulted in remarkably high results relative to what economists on both sides of the aisle and Wall Streeters on both sides of the political spectrum thought was possible. If you go back and listen to what was being said in early 2017 about how ridiculous it was to think we could move from 1.5% to over 3% GDP within a 4-year period, and we did it in a 1.5-year period. And we did it without inflation getting above 2%. And we did it with corporate profits getting stronger and stronger, 22% last year, close to 20% plus this full year. And no one knows what's going to happen next year. We'll just have to see. But it could easily be low double digits, which would be enormous. Productivity gains have been getting stronger and stronger, and confidence on the part of the consumers on both sides of the aisle and on the part of corporations, corporate confidence, are at or near all-time historic highs. In other words, there's enthusiasm that something real has begun to develop in terms of the underlying economic strength. Okay, that's the backdrop by which for the last 4 or 5 weeks I've said, okay, Consensio says take 5% out. Now we've got to take another 5. Now we've got to take another 5. And we just followed the rules. And so we're going to look at what those rules look like today. And are we going to start being able to put cash back to work in the markets? Or is it way too early to do that? So that's going to be the theme. Now, I will make a couple of comments of why I think that we've had this market reaction. And I believe it's because I don't think we would have this if the Democrats had historically done something out of the ordinary relative to midterms in terms of losing seats to the incumbent president. Bill Clinton, in his midterm, lost the House and the Senate and was reelected. Why is that? Because when one party holds all the cards, there's nobody to criticize except that party. So when the Republicans for the last 2 years have had the House, the Senate, the presidency, and now the judiciary, who do you point to when things go wrong from the Republicans' point of view? Or under the Clinton administration, who can you point to until the Republicans take over Congress? And then you can say, you're doing this, you're doing that. The reason we're not doing better is because of what you're doing. So the commentary today is that the seats that were won by the Democrats in the House are average or below average for what is normal in a midterm election. It's to be expected. Now, there was some hope on the part of Republicans that it wouldn't happen. On the other side, the Republicans strengthened their hold on the Senate. And of course, the Senate is the body that decides if judicial appointments are going to go forward, just as we saw with Kavanaugh. So now all of a sudden, you don't have gridlock. What you have, I believe, the market is saying after this very short day, and could reverse it all very quickly. But I think what the market enthusiasm is saying, maybe it's possible we're not going to have gridlock. We are actually going to have the three main groups, the presidency, the Senate, and the Congress, trying to get things like infrastructure put together, trying to get things like more job programs that are paid for instead of more job programs that haven't been paid for. And I was glad to hear a number of Democrats, not all of them, but a number of them saying, okay, we are not interested in investigating, we are interested in legislating, all the way down to Nancy Pelosi, although she wasn't smiling when she said it. So what my point is it possible, we all, you know the adage that Wall Street loves gridlock in Washington, because that means nobody's going to screw anything up. If there's momentum going on in the economy and the stock market, the last thing you want is strong legislation coming out to mess with things. So, but gridlock isn't usually that great for the stock market. It can be pretty good for the stock market and be pretty good for economic growth, as long as there's already momentum behind it. So maybe this is a big jump on my part, and we'll know a week from now for sure as we get into November, and I'll talk about that a little more. Okay, that's just my overall view of things, why I continue to say that I believe we're going to new highs by the end of this year, regardless of the outcome of the election. I thought that if the Republicans had held both houses, we would have a very big positive reaction. I am very gratified to see that that did not occur, and we still had the reaction we did. Now, I don't want to overstate, this is a huge day, but I don't want to overstate that this is definitive in any way. And let's look at the charts to understand that better. So what we will do is we will go to the charts.
And obviously, everybody, I'm watching your live chat. Always fun. And so send through any questions you guys have. I'll be able to pick them up.
Okay. Now, thank everybody that listened to our webinar, and thank those individuals that say they've got 50 pages of notes, and they're going to post them to people that joined our webinar on Telegram. We've got a channel just for all the people that listened to that last webinar so they can exchange ideas. And we've got a huge response from that. And I just sit back and learn from everybody. Everybody's analyzing everything terrifically well. But the reason I bring that up is one of the things that we did is we talked about not only portfolios, but Consensio. And there have been a lot of questions with the new group who hadn't seen the first webinar on Consensio. Is there a way for them to go back and get that webinar? And the answer is yes, and Leah will tell you how at a later time. But the reason they were asking about Consensio is because of my changing the length of the moving averages in terms of time. What we're looking at today is we're looking at longer moving averages. We've dropped the 3 and we're looking at 7, 30, and 50. And I'm not going to go into a lot of explanation, although I've posted some things about that. But the longer the time period you're looking at, the more powerful the trend, but the longer it takes to identify a trend change. So what I wanted to do today is I wanted to look at the 7, the 30, and the 50, mainly the 7 and the 30 on a weekly basis. Why? Because 7 weeks is approximately 35 days, just a little less than 40 days, and 30 weeks is a little less than 200 days, 150 days on a 5-day asset. So this is somewhere between what I would normally do, which is shorter. As you know, I use either a 2 or a 3, a 7, and a 30. But I want to look at the 50 also. Now, 50, which is the blue line on all the charts you're going to see today, 50 is 250 days, basically. So it's more than 200. The purple is less than 200. And the yellow line is the 7, which is a little bit less than a 50-day. And we're not going to worry ourselves with the minutia of the short, very short-term moving average, which, as you know, if you've been listening to anything we've said, should run right through the middle of all the prices. Well, we're beyond that now. We've already raised a lot of cash using that short-term technique, which got you 5% cash, 5% cash, 5% cash, another 10% cash to 25. But then you're in the big leagues. You've got 25% sitting in cash. Now, this is a normal time to extend your analysis to longer moving averages. Okay, so that's what we're doing today. So we're starting with the Dow. And what I'm going to do is I'm going to make this full screen. And I just want to take a look at, first of all, the price break below the short-term moving average, which isn't really a short-term moving average. I would be selling at that point. The price then dropped below not only the intermediate term, but the long-term moving average. And I would be at 25% cash on that candle. Whereas on the shorter term candles, I would still be sitting at 15 waiting to put in more into cash. Now, last week, we ended bouncing on the Dow Jones Industrial Average, which is the strongest of the indexes. We've talked about that before, back up through both of those moving averages. I wouldn't have taken any cash off. I would still be 25 because the short term is coming down very, very quickly, and all it's got to do is penetrate the intermediate, and the long is right below it, and therefore you could cut through them very quickly, and you could be in for a tremendous drop if that were to occur. Now, here's what's happened today. And on Monday, this is Tuesday, so this is a 2-day candle. It's a weekly candle, but it's only 2 days. We exploded back up off the intermediate term, well above the long term, and right through the short term, and are well above it. On that basis alone, I would be taking some cash, probably 10% on a 25% basis off, and putting it back in the Dow, just in the Dow stocks, off of that chart. Now, if you've got 5 different indexes, each one of them's got to be analyzed separately. So what you're hearing me say is talking about 30 stocks in the Dow. And we're going to take a look at the Dow transports in just a minute. But I just wanted you to understand the difference between me being 35 to 50% in cash with another 15% on an inverse fund, which anyone that's been listening to us knows what the short-term Consenso has done, and I have followed that. So I've got a lot of cash for clients. That's why we're looking at this longer term, just to see how safe this move is that we saw today. Okay, let's go to the next one, which is the S&P. The S&P 500, not quite as strong as the Dow. Notice the second candle back, not the one from yesterday and today, but the one before it. And now I'm going to pick the Dow back up, and I want you to understand the difference between these two. The fact that last week we were able to cut back through the long term and the intermediate term on a closing basis, as opposed to the S&P, which last week closed below both of those moving averages, tried during the week to get back above the long term and couldn't do it, closed below it. So off of this chart at the end of last week, I would not have taken any cash off. I just said that I would have taken 25 gone from 25 to 15 off of the Dow chart. I would not have on this chart, but then look what happened yesterday and today. We blew right through the long term, right through the intermediate term, and right through the short term. Now the short term is crossing the intermediate term, and that's important on the S&P. Look at the Dow. It's nowhere near it. On the S&P, we're right on it, and the only way, because of the speed with which it's coming down, is we're going to need to at least hold today's gains. And if we can add to it on Thursday, Friday of this week, then we will turn the short term back up fairly quickly. But until that occurs, this is still worthy of a 25% cash on this long-term basis, as opposed to getting a little more aggressive on the Dow Jones. Let's take a look at the NASDAQ. This is the NASDAQ 100 stocks. It closed right on the long-term moving average last week. Better than the S&P, not as good as the Dow. Big move on Monday, Tuesday, and today has brought us right up to the crossing of the intermediate term and the short term. But notice the intermediate term is still going up as it has on the Dow. This is the purple line now. After turning down briefly, it got back into gear because of this action. So it is at the present time moving up parallel to the long term. And the Dow, that is the Dow, the S&P, both the intermediate term and the long term are still moving up. That's why we never got 50, 60, 70, 80, 90% on even shorter term charts with shorter term moving averages, but we did get as high as 50% with a 15% inverse fund. Okay, the NDX, the NASDAQ 100, is doing better than the S&P, but not as well as the Dow, but both the intermediate and long term are still moving up. I still, because we're below as of today's close, the intermediate, or closed right on it, I would not be taking anything off the table, meaning cash, to put to work in the NDX. I need more evidence. And just as in the S&P, going to see a cross of the shorter term moving average. So we need that to turn around before we start putting new money in the form of cash back into this, assuming that this is going to be the resumption of a bull market. We stopped the bull market up here. And we showed that with shorter term moving averages. That's the end of the bull market in steps, but it never made it all the way into a bear market. That's where you use Consensio to slowly scale out, slowly scale back in, or if you slowly scaled out, you continue to scale out as you move in the early phases of a bear market. Okay, let's go wider. Let's look at 2,000 some odd stocks in the NASDAQ composite. Last week looked like an S&P week. This week, we made it only back to the short-term moving average. The short-term moving average has already crossed the intermediate-term moving average. I would not be taking cash out of whatever cash has been raised in this until further evidence. Let's take a look at this very important index that I've talked about over and over, which is the Dow Jones Transports, which had really gotten killed relative to all the other indexes we've just seen. And you can see how far last week's close was, not only below the previous week's close, but how far it is below the long-term moving average. That's a very dangerous situation. And all we're doing now is bouncing back up to the long-term moving average. But notice the short term has cut through the intermediate term and has already cut through the long term. That means for the Dow Transports, this action that we saw today has got to get going tomorrow and on Friday into next week. Otherwise, all we're doing is bouncing back to a long-term moving average that is moving up, but finding resistance. And it won't take much to turn the intermediate down now that the short is below it. And we are now below the long. It will take a lot longer to turn the long one down, but I will be long gone before that happens with this particular index. Now, the reason I'm talking so much about the Dow Transports is because of the Dow theory. The Dow theory gave us a buy signal up here on, unfortunately, a 9 on the sequential, but it was a Dow theory buy signal because the Dow Industrials had done the same thing. Gone to new highs above the previous highs. The transports did the same thing. That's considered a Dow buy signal. Now, we came very close to a Dow sell signal, and we would have done that if it weren't for these last two candles. And we won't explain that today, but I will do a vlog specifically on the Charles Dow theory, which has worked very, very well for over 100 years. Okay, so the Dow transports are still weak, and with the pop today, they are still weak. I would not be putting money into the Dow transports in the form of cash. Here's the other one that was really worrying me, and you can see I'm still very worried about this one. This is the Russell 2000. It absolutely collapsed. And last week, even though we had a higher close than the previous week, we didn't get near any kind of resistance. The short term is cut down through both the moving averages. They have both gone flat. And with this much activity below the intermediate and long-term moving average, these are going to turn down. Now, I've got a theory about that, and we'll talk about that at the end of this show, because we have just ended silly season. Silly season started back here. I believed all of this was political. Silly season just began this month and will last until December 31st. And that has to do with large institutions changing their portfolios around to look good on December 31, which is when they get paid their bonuses for the year relative to how they've done relative to indexes and relative to their competition. And I'll explain that very briefly. We will do a whole show on that as we get closer to the end of the year. But this one can't be touched. So out of these 6 indexes, which takes large cap, mid cap, small cap, transportation, and includes all of the big aggressive growth technology stocks repeatedly in these 3 indexes, we come away saying you could put a little bit of cash that you took out over the last 4 weeks using shorter term Consensio figures, you could put it back into the Dow. You might be able to tiptoe around the S&P, but I am not recommending that. I wouldn't touch any of the other ones. At this point, that means as of 4 o'clock close today. Okay, now what I want to do is I want to get a little more granular. We're not going to spend a lot of time today because I'm just talking in big general terms. It's way too early to draw conclusions from what we've just gone through in this election, in any sense, politically, economically, or for the market. It can turn on a dime, or it could explode up from here, and you've got to be very, very careful in your decision making. Okay, let's take a look at sectors. And let's start with the consumer goods that had fallen so sharply, the IYKs. And I'm going to go full screen on this because this is a low below a previous low. This is a high below a previous high. This is an intermediate term cutting down through the long term. That is the death cross. This is the long term moving down. This is the intermediate term moving down. And the short term way back here cut through both of them. Now, there is some good news in this chart for getting Consensio or moving averages, which is these lows basically held these lows, closing lower, but this is a very long wick down to here that was not taken out. And also, these lows and these lows did not take out these lows. Back at the end of December of last year and the beginning of this year. Other than that, this is a horrible chart, and you should not be in this. But look what we were able to do in the last 2 weeks. We were able to cut up through the short-term moving average, actually got above the intermediate term, didn't close there, but got above the intermediate term, and then look what's happened in the last 3 days. We have not only soared above the short term and the intermediate term, but we are not very far away from the declining long term. Now, does that mean I'm bullish? No, but what I'm pointing out is one of the worst performing sectors that makes up the Dow, the S&P, and the NASDAQ has in a blink of an eye run from 110 up to 120, almost an 8% move in a very short period. Most of that came at the end of last week and this week. I would not be putting money in this, but it is something that is important to look at. Look at your weakness before you look at your strength when you're trying to understand the parts of the market. Now, this is the consumer service side, or the staples, which had held up very well, even down to the bottom. That's the best looking bottom of any of the indexes we've seen. And we closed above the intermediate term moving average last week, which was moving up. And as of today, we've closed above the short term, which has not crossed below the intermediate term. And this action might keep it from doing that. If the short term turns up, what do you have? You've got a bull market. Would I put cash that I had taken out on this drop into this, I certainly would. I wouldn't be doing it on the consumer discretionary side, but this chart, because of today's action, is looking powerful, which means that you can put cash back into it. How much cash? If you were 25%, I would definitely take it down to 15 or even 10, but I'd be ready to put the rest of the cash to work here if you see the short-term moving average turning up. Let's look at the energy, something that Leah has been talking about in a number of tweets with a number of people, and she's got me looking at it very carefully. Let's take a longer term view of this. If you remember, energy all the way through 2016 looked horrible. And that started in 2014. And because of that, as the rest of the market started moving up in 17 and in 18, we thought it looked very good to jump in at this point, go long using money from technology. And that worked for a short while. But then very quickly, it all came apart. You had the crossing of all three moving averages and all three moving averages moving down. So you go from a very short-term bull move to a very short-term bear move. Another attempt at a bull move, which didn't quite make it because the long-term moving average never turned up. And then we had this run. And that was looking pretty good, except it couldn't take out this high. And the second attempt couldn't take out that high. Now you had all three moving averages moving up, and it was a place to put some money in, but it gave it all back very quickly. That's why you don't jump completely in or out of any of these until you've determined what the trend is. And the longer the trend is, the more you can put in relative to cash and other investments. Okay, but now we did break the setup trend, the setup line 3 weeks ago on a closing basis, which looked very bad. Last week, we were able to bounce back above that. And then this week, we've come up very strong. We have not yet really turned down with the intermediate or the long term, although these projections on the long term show it continuing up for the next 3 weeks. But the intermediate looks like it's going to come down if price stays right where it is right now. I would not be putting, although my brilliant partner Leah believes that we've got some very bullish looking things happening on the fundamental side of energy. So I'm just talking technically at this point that we do not have evidence at this point that money should be flowing back into energy. Okay, let's take a look at the financial sector, which has brought the two moving averages together after looking pretty darn good throughout late 2017 and all the way up until this 9 on the sequential. And then we came all the way back and then had another 9, which started this move down. The short term is below the price. The short term is below the intermediate and the long term, and they are going flat. I think it's too early to put cash to work in the financial sector until we see if this big spike up today is going to be able to turn around. You can see the short-term projection with price right where it is turning to the upside. But I need a lot more than that before putting clients' money at risk in this area. Okay, let's take a look at health. Healthcare has been doing very well, had a great move today. Why? Because both sides of the aisle want to do something about healthcare. But for the last 4 or 5 weeks, we have come down to the intermediate term moving average, which continued up, was not broken except very briefly 3 candles ago on a closing basis, popped back above it last week, blew through all of it this action yesterday and today. On that basis alone, I would be moving completely out of cash back into healthcare for that amount of money that you have in healthcare or designated for sectors. Now, remember how I manage portfolios. 60% are in indexes, 25% are in sectors and industries, and 15% are in individual issues or very volatile things such as Bitcoin. So what I'm saying by looking at these sector charts is if you've got 25% of your portfolio, there are some places you can put cash. And one of them, besides the consumer staples, is healthcare after this action. We will reevaluate on a daily basis, but for now, that's the way the healthcare looks to me. Let's take a look at the industrials, which had collapsed. Very similar to what we saw on this chart, which were the financials. Take a look at the long term and the intermediate term relative to the short term going flat. And now let's take a look at the industrials, the exact same thing. Flat on the intermediate and long term, short term breaking down below both of them. But now we are right on the short term. I would not be putting money in industrials, but look how close we are. We're one candle away with a big move up on closing above all 3 moving averages. A candle like today's candle could do that. So I would not be putting money into it, but it would be one I will be looking for because it can quickly turn. Here are the utilities. We've been talking about this, and it has basically been moving opposite all the indexes and all the other sectors. It's in a full bullish mode. I would love to see it take out the sequential setup line, which would also take out these highs. But as we sit here right now, we are in a bullish posture with the short above the intermediate, which is moving up, and the long, which is not moving up. And for that reason, I wouldn't be 100% in this. I want to see the long term turn up. But I would definitely be putting cash into it if you don't have cash already in that, in the form of either this particular ETF or utility stocks individually. I'm not going to go into details. I said individual stocks should only be 15% of a portfolio. But if you get enough of them together in the same sector or industry, you can move that out of the 15% into the 25%. So for example, if you were to buy a half a dozen individual utility stocks, which would make up 12% of a 15% allocation, you can call that an industry or your own little ETF and move it out of the 15 into the 25 to be able to buy other individual stocks or more volatile positions. That's getting into portfolio 201 and 301 as opposed to 101. But I just wanted to clarify that you can do things between those 3 buckets. Let's take a look at the IYZs, which is telecommunications, which took a very nice pop, turned the short term up, stopped the long term downtrend, and it started up. excuse me, the intermediate term, which is about ready to cross over and won't take much to do it because of the action today. It is one to watch. In my estimation, it is not one to put cash to work in. Here is oil specifically, meaning WTI crude, and it has had a very rough 5 weeks, and you can see that it did not respond well to everything else going on. I think it's too early for oil. We will read and see what Leah has to say on the fundamental side, which can tell a very different story. We're only looking at technicals right now. Here are the home builders. Run away, run away. Everything is down, not looking good. We did get a pop last week, little bit of a pop here, but this is not one to play around with. You can play around with it in your 15% bucket with a small piece of like 2%, but this is not something to put a lot of money in at this point. It could become, but we don't deal in what could happen, what we hope to happen, what we think is going to happen. We let Consensio define very specifically where you are at any one point. And here's the XLKs, which are the technology. Amazing bounce today. A lot of 2, 3, 4, 5, 6, 7, 8, 9, 10% moves today. Very big moves on things that have been hurt. And in a very short period of time, even though last week was a close below the long term, we've gone from below the long term in the last 3 days to above it, all the way to the intermediate term, and we cut through the short term by doing that. Too early to tell, but that's a pretty good looking move. Okay, I don't want to go on and on. Those 8 or 9 charts in the sector area that we looked at, and the 6 indexes we looked at should give you a picture from what I've described of how I'm looking at this pop today. I am not saying that we are not bottoming. I am not saying that we are not going to bottom. And I am not saying that this is the beginning of a big move. It's way too early, but you can move some money around in anticipation of some of the things I just showed you. But I want to see follow through tomorrow, and I want to see follow through on the next day. Okay, so I want to get out of screen share. Have I gotten out of screen share?
You're out. The trend is your friend, but is the friend in Bitcoin?
Okay, so what we've just described is why I've been saying over and over again, the trend is your friend. Make it your friend. Don't make it your enemy. Don't try to go against the trend. Don't try to play bounces in Bitcoin, hoping or thinking or listening to somebody that says the bottom is in, when all the Consensio, and we're not talking Hyperwave at all, we're just talking Consensio, is saying this is still a bear market. Don't go against the trend. There are experts that go against the trend at various times, but believe me, they really know what they're doing, and very often they get their heads handed to them. What I'm talking about is a very simple way of making sure you never miss out on a bull market, but far more importantly, you never miss out of getting out of a bear market before it hurts you. And up until today, we cannot make that call. We can shuffle chairs around the deck of the Titanic. You can take a little bit from here and move it over to the other side and put this chair in front of that chair. But if you're going down, it's not going to matter. You've got to make sure you're going up before you start putting significant dollars in the market at this point. But my message is a lot of things are looking very good after what could have been potentially a very disastrous day yesterday. Just the opposite has happened. And that's what I really wanted to stress. Now, I am going to go back to a very quick review of Bitcoin because we did get a pop today. And I want to talk about my phase 2 line, and I want to talk about these pops that are counter trend pops. At some point, movements up will not be counter trend. They'll be going with the trend. And the counter trends will be to the downside. That's not where we are today. So back to screen share. I am going to have to do some fancy things to make this one work. So I'm going to go here. I'm going to go here. I am then going to go somewhere else. Where is my Bitcoin chart?
All right, I'm chilling while you
Okay,
figure it out. All right,
do.
everybody, this guy is amazing. Stoic Crypto is his Twitter and his Bitcoin shop, and it is just so funny. And obviously, I picked up tones. If only a green 2 above a green 1.
Oh yeah, that's great. I love that one. That's incredible.
This is Tyler and mine, and I totally wear this one, as you guys have seen, and he's just incredible. Check out this one. And I'm just gonna have more fun. What does this say? The swarm is headed towards us. Oh, Corey, there's totally one for you here. Hold on. This is Tone. He always says these are his favorite words. Unconfiscatable, censorship-resistant store of value. So pretty much, you know, he can just wear this one and not need to speak out loud. Just point to his shirt. Sovereign. You guys have seen me wear this. I'm just like chilling. I'm watching you, Ty. That actually is me. There we go. Oh, Corey, the one I was looking for is actually oh, there we go. That's you, Corey. Thought you'd like that. This one's so cool, guys. It's a Genesis block, obviously. Boom, boom.
Now I can't find my hand.
Oh, really?
Yeah, I know I don't see it.
Oh, okay. All right, what you guys got for me while Tyler's figuring this out? Ty, do you want me to, you know, if you're not showing the chart for now, do you want me to just ask you some of the more high-level questions that people are asking about Bitcoin?
Yeah, absolutely. I'll just search around.
Let's do it. That's always more fun. All right, ready, Ty?
Yep.
Okay. So let me pull all your questions back up. Well, you know, without showing the line, do you want to just say where your line currently is at?
No, let's do questions, and I'll have this up in a second.
Okay, sounds good. So let's see your first Bitcoin question, guys. You actually were asking a lot of different ones. Oh, okay. I got a question for you about shorts, Ty.
Okay.
Oogie. So, well, actually, it was just a live chat comment. But if you want to comment about it, the comment was, can someone tell me, since the shorts are at a 3-month low for Bitcoin, what are the odds of it going down? The odds of it going down are technically higher now, right? I'll put a question mark after that one.
Do that again, please.
You got it. I'm going to switch it into a question. And person in live chat, I don't know if you're entirely correct, but we can look at shorts. I can pull it up on TradingView afterwards, actually. But if the shorts are at a 3-month low for Bitcoin, what are the odds of it going down? The odds of it going down are technically higher. Is that correct?
Yeah, I'm sorry, I just don't understand the question. If what happens again, I'm going to stop looking for this. I'll listen closely.
Okay, sounds good. So the individual is saying that we're currently at a 3-month low for shorts. So is this saying that the odds of Bitcoin going down is technically higher, aka is it showing that it's going to go up? Yeah. Let me rephrase this in a way that I would rather ask the question, Tyler.
Let me phrase it a different way. I think I know what you're saying.
I could phrase it too. Yeah, go for it. But that's what the gentleman, woman say.
What you're saying is that the net shorts the tone has been showing have been bouncing along historical lows. And usually when that happens, it means the price is going to go up. But recently, what's happened is we've taken a big run up in terms of net long versus net short. So the question is, because we're no longer at extremes on the short side, does that increase the probability that we are going to go down? And the answer is yes. The lower the line is that shows net shorts being very, very high relative to net longs, which is where we've been bouncing along historical levels. Tone showed something a couple of days ago. I think it showed that this is the lowest it's ever been in the history of Bitcoin. And because of that, there was a great possibility that the shorts would get squeezed to the upside. So when you're down that low, the probability is you're not going to go much lower, you're going to go up. So the questioner is saying, because we're no longer that low, does that increase the probabilities that we're going to go down? And the answer is absolutely yes.
Well, there you have it, guys. Well, I don't understand during this time why you guys aren't sending me more questions about Bitcoin. If you guys want me to start making up my own, you know I like doing that.
Somebody give me a clue how I can find our Hangouts. It should be on the bottom and it's not.
Our Hangouts? You mean screen share?
No, Zoom or Hangout, whatever we're in.
We're in Hangouts.
Yeah, but I'm not. I can't find it anywhere. I can talk, but I don't have the Hangout page, so I can't do screen share.
Oh, that would be a difficulty. I see you right now. Everybody watching, this is the difficulties of going live. And Corey, I can only imagine how much you're laughing at us right now. So, Ty, do you want to go back on with the charts later, or do you want me to pull up my trading view?
Yeah. Well, no, I was going to use Bitcoin Wisdom.
Do you want me to pull that up?
Yeah, because I've got it pulled up on my screen so I can talk through it and so people can see it.
Yeah.
And I've got a theory about what's going on. Oh, wait. Okay, there we are. It's okay. I found it. It's all right, everybody. Okay. So now what we have to do is we've got to go application.
In the meantime, someone send a joke through. Yeah, Corey's laughing. Yeah, Corey says we're fired. But Corey, at least we have like really cool t-shirts and we match today. So that'd be good. Hey, everybody should come to Unconfiscatable in Las Vegas, 1000%. First of all, I'm going to wipe everybody's money off the table. Actually, not true. Tyler is a shark. He can actually tell you a story later of being trained by the best. But Ugly Old Goat's going to be there. We'll see if he's going to be in the mask the whole time. Probably Vegas won't let him do it. He is amazing. I met him on the cruise. Tone, Jimmy, Giacomo, Ty, Doug Poke.
Yeah, Doug Poke's really good. Why don't you pull it up? I can't get it up.
Yeah, you want me to do Bitcoin Wisdom or Trading View?
Doesn't matter, whichever. Yeah, John McAfee screwed my computer up yesterday, and I've lost all my webinar stuff. I lost all of my presentations. I've lost everything.
It's because he was very angry at how much I smashed him on the Coinsbank cruise, but he deserved it.
I think he should be invited to the Unconfiscatable.
So that I can smash him more.
We might have a surprise for me.
I like it. Hey, Ty.
Yeah.
We're up.
Great.
Oh, I even have your SARs.
Okay, great. So what we are looking at is the last little bounce.
So that was the 6 hour. What do you want it to be on
The weekly.
Weekly. Done.
Okay. So stop and reverse is still very negative. So if you can take that off.
Mm-hmm. Wood.
Yeah.
Done.
Okay. And why don't you put up the Bollinger Bands?
Okay. Did not mean to do that, everybody.
Yeah, you can just right click on it.
Oh, really? Look at you.
I know.
Oh, okay.
Bitcoin wisdom, I'm a master. Okay, Bollinger Bands. We have not moved above the middle line. Negative. So that's 2 negatives in a row. Let's take that one off.
Oh, right click?
Nope, you've got to actually get out of it. And let's put on the
Stochastic RSI.
What does that say?
I mean, we can do a bunch, but we look at stochastic RSI.
No, that's okay. Up on the top, there's usually 3. SAR, yeah, moving averages.
Done. Do you want EMA, MA? MA. I know you.
Yeah, EMAs don't work.
Yep.
Gotcha. Okay, fully bearish. That's 3 for 3. Let's go down to settings.
I was just playing with time period. Okay. So now you guys can see. There we go. Settings, yes.
And now go down to the third bar down, go to RSI or MACD. You've got the RSI already.
Yep.
Fully bearish and MACDs have gone slightly positive, but are still below the 0 line in terms of the 2 moving averages. But you do have one of the moving averages slightly above. But look at the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 histograms. Absolutely flat, dead. Nothing is going on with the MACDs. What you need to do is you've got to cross above the 0 line, and then you've got to begin to expand. I would call that neutral, not negative. So now we are 3 and we are now 4 and 1. 4 negatives, 1 neutral. Okay, let's take a look at the that's good. That's enough. Okay, on a short-term time frame, maybe just expand it so you've got the 20,000 top in.
Okay.
Great. Perfect. Okay, thanks. Okay. Visually, you can see 1, 2, 3, 4, 5, 6, I would say 7 and 8 pops from the top. The first one was a huge one, which occurred at the beginning of 2018, where we broke up through that moving average. And Tone has talked about that. We got up to 17,500. Then we dropped down to the lower moving average. And then we had the second pop that took us all the way up to close to 12,000, 11,780. But remember, you're in a downtrend and you're trying to play pops to the upside. Then you've got the third pop that took us to 10,000 and came to the underside of the long-term moving average after the death cross. And it failed. And then you have the fourth pop, which occurred in August, late July and August, and took us up to 8,000, back up to the long-term trend line, and then it failed and went back down to 6,000. Then we had the next one that made it to 7,380. And then we had a little tiny one that everybody got excited about that couldn't even get back to 7,000. Then we had another little tiny one And if you just switch to, let's just jump into a 12-hour, if you don't mind.
That'd be fun.
Because what caused these little pops, on the one hand, was tether on the left side of your screen there, that then basically gave back all of that gain. And now we're working our way back up. And on a very short-term 12-hour time frame, we do have a positive cross of the intermediate term above the long term. But remember, we're talking very short term. These aren't weekly. They're not even daily. They're 12 hours. So we're in another pop right now. To be significant, this pop needs to get above the tether top, somewhere around 6,800. And we're kind of stuck at 6,500. And maybe we're going to take another little move up from here. But if we go back just to the weekly, if you don't mind, Leah, just one more time.
Mm-hmm. I like driving, so keep going.
You're doing great. And what you've got to ask yourself is, what is the trend? And if the trend is your friend, are you fighting it or are you going with it? Now, everybody will admit that the trend from 20,000 down to 6,000 was a trend. What people are arguing with is, yeah, but the trend clearly is now sideways. And I would agree with that. Let's just assume that 5 out of the 6 of the long-term indicators I use, plus Hyperwave, which we're not talking about right now, were not negative, but they were neutral. They're not, but let's assume they are. So let's all be on the same page, the bulls, the bears, the people that aren't sure, and say that we've got neutral price action along a line that runs from about 5,800 up to 6,200, but more progressively closer to 7,000, going sideways, back and forth between that. And that's gone on for months. Now, I ask you a simple question having to do with the adage that I use often, which is, if you're not sure if something is going to break up or down because it's neutral, what should you do? Should you be long or short? And anybody that's listened to our vlogs and our webinars knows mathematically the answer to that question. The answer is you should be out of the market. You shouldn't be long or short if you don't have overwhelming evidence where the trend is. Okay, so let's assume you're out of the market. Now you've got to make a decision. Are you going to go in the market or are you going to go short the market? Both of those are aggressive moves with your money. The money's in cash. We just agreed on that. And you are trying to decide you want to go long or short. The answer is it doesn't matter. Both of those decisions are wrong. They're incorrect. What you want to do is stay in cash until you get some recognition that you are trending up or trending down. Now, if you're trending down, the way I approach that is I get into cash. I don't short it. Because if I stay in cash in a downtrending market, I keep all of my money. If it is trending up, I am taking a huge risk in a neutral market to make that call instead of being in cash. Why? Because if I'm wrong and it turns down, I'm going to lose what little money I have. If I have $10,000 or 100,000 or $1 million or 10 million or 100 million, by putting some of that into something on the long side that goes down, you're going to lose your money, some of your money, depending on how aggressive you are. If you stay in cash and it goes down, you don't lose anything. Too many people in this space think you need to be either long or short. You do not. If you don't have definitive evidence, you should be in cash. And I have just given you what I believe to be definitive evidence that we are still in a downtrend until certain things happen which have not happened. Therefore, there is no way I would be putting money in this market, regardless of these little pops to the upside. I have explained that if we can get back above 8,500, which was 4 pops ago, that I would consider putting some money in on the long side, because we will be taking out a previous top, but it would be a very small amount of money. And I would need for some of the negative things that I've just described to you on a weekly basis to be at least neutral or to be moving into positive territory. And none of that is true. Therefore, that's my position on Bitcoin. Thank you, Leah, for letting me go through all that.
That was fun. Oh, it's on me. I like being able to drive. All right, Ty. So we're going on an hour and 15. You wanna call it? You wanna take 2 questions? What are you feeling?
If there are any good questions, we'll take them. But what we do want to do is we want to once again thank everybody that have attended our first 2 webinars. We had no idea what to expect. We were overwhelmed with both of them. We've got people that didn't buy into the Consensio one now after watching the second one, and the referrals to Consensio are now buying the Consensio, and they can keep it as long as any of you that are already in it have it, which is late November, I believe. So thank you all for that. We really appreciate it. We are considering our 3rd one, which is going to be, we believe, unless some of you tell us there's something you would rather hear, on the 20 or so technical trading indexes, systems, and techniques that I use on an everyday basis to manage money and have for a very long period of time, breaking them all down in their simplest form. As you know, I like to break everything down into utter simplicity. Many people say it's way too oversimplified. That's fine. Everybody's got their own opinion, but I believe the simpler you can make these things, the more people can use them as tools and not be befuddled by what should I be doing here, what should I be doing here. It's really not that complicated. And I think that's what we're going to talk about, but we'd like any of your ideas about subject matter for our webinars. And the second thing I wanted to say before I let Leah go into a lot more detail, if she cares to, is this unbelievable conference coming up in 2 months called the Unconfiscatable Bitcoin Only, Bitcoin, with remarkable speakers from all over the world. Giacomo's coming, Saifedean is coming, Max Kaiser and Stacy will be there. Peter Todd and Trace will be there. It's going to be, you know, it doesn't get any better than that. What's not going to be there are people shilling ICOs, unless they want to pay up and sit at the table and incur the wrath of all the maximalists around the table, or presentations about altcoins or forks or other blockchains. This is Bitcoin only, which Leah and I deeply, deeply believe in. Everything I just said about where Bitcoin is right now has nothing to do, as you know, of where I think it's going, inevitably, much higher. Just don't tell me what to buy, tell me when to buy it, and this isn't the time to buy it. Okay, so with that, just go to Unconfiscatable, Tonebase, unconfiscatable.com, and he's got a great website put together that explains all of the things that are going on and what you can choose from. Leah and I will be doing a presentation, the first one publicly in 20 years on Hyperwave. There are limited seats. And very shortly, I believe Leah will explain what's happening with our website and how you can get involved. So thank you all very much.
Yay. And then also, yes, so sweet t-shirts. Ty and I are so cool when we match. And Corey, thank you so much. Corey's, you know, the man that's putting together. He's also one of the partners for Unconfiscatable, like us, Ty. And he is the one that helps us put all these into a podcast later. So when you guys don't need to see us look so
Sheep.
yeah, oh, really cool. Then you can just listen to us later, which maybe is not a bad idea. So that's, you know, on the podcast. And yes, everybody, thank you so much for watching. I noted on all the things in the live chat. We'll make sure that, you know, we're able to show the Hyperwave better later and talk more about phase 2. But it's Wednesday, we got Thursday, we got Friday, we got the rest of the days coming up, and we're here. So yeah, we'll be announcing more details on exactly the workshop and what you'll see. It's going to be a 6-hour in-person workshop at Unconfiscatable on the Friday pre-party. And that'll be really good fun. Yes, our website will be up in a couple days. Takes registration, super exciting. And new webinar coming up in about 2 weeks. That's going to be amazing and based on feedback that we've gotten from you. Okay, and I'll let you guys go for the night. Thank you so much. Thanks, Ty.
Great. Thank you very much, everybody.
Bye.